7 financial lessons I've learned managing my own retirement portfolio. At retirement, I started managing my own retirement portfolio. And I've done very good, I think, overall, but I've learned some lessons that I could have probably, should have, would have done differently. And I made note of those. I'd like to share those with you today. Now, these are only my personal experience, and it doesn't apply to everyone by any means. And of course, as they say, I'm not a financial advisor by any means either. But here we go. The first lesson I'm going to say is your investable portfolio may be different than you think. It was for me, at least. And I'll tell you why. I had a business, I sold it. Now, when you sell a business, you think of the price and you think of the tax consequences. But, then they wire transfer the money to your account. So, you got this sum of money, large sum of money in your account. And so what do you do with it? Well, I was not really prepared for that. I was a real estate broker for 40 years, and I was a real estate investor with 9 rental properties. So all of a sudden, I've got this money in my account. Not only that, I started selling my rental properties because I'm retiring. I loved it when I did it, but 20 years of property management, I didn't want to keep going. And so I didn't sell everything at once. I kind of sold one house per year, 1 or 2 per year. All of a sudden, you're managing real estate. The next thing you know, you're managing financial assets. And so that's 2 things. My wife, she converted her 401k into an IRA account, and she wanted me to manage that as well. And that's 3 things right there that added up to a pretty sizable amount of money. And we also sold a large home. We downsized to a smaller home. But there's all kind of things when you're cashing the chips in. You may find yourself with a bunch of financial cash or financial assets that need to be deployed into a portfolio. And there's a lot of things to think about. And I don't think I was really prepared for that. I mean, I had an accounting degree. I was a certified internal auditor at one time and managed the audit department. I know numbers, but I applied all that to real estate, not financial stock investing. So there you go. So number 1, your investable portfolio may change upon your retirement. Number 2, do you need a financial advisor? So I didn't go that route. I met with one, I talked with one. Looking back, I really could have benefited by having a financial advisor because at least they could have done a risk profile and maybe set up the retirement portfolio for me. And maybe after a year or 2, I would take it over. I think that would probably have been a wise thing to do. But I didn't. I did it myself. Now, this was 2006 and 7. And you know what happened there? The great financial recession, depression, whatever it was called. And so I was stuck with all this cash. So I went to Charles Schwab and talked to them. They actually contacted me because they noticed I had some money in my account. So he was very helpful. But I said, I'd like mostly, fixed income. And he told me this, and this is going to lead up to my next lesson. He said, interest rates, they were 5.5%, I remember. He said, what do you think interest rates are going to do? The government has got unsustainable debt. Government spending is high. What do you think is going to happen to interest rates? And he said, his conclusion was they got to go up. If I was you, I would stay short term, like 6 months. Now, interest rates were 5.5%. Well, what happened was, as you may know, interest rates went down to zero. Zero. So, I don't blame him. Nobody could see that coming. But my next lesson is experts can be wrong. Stop watching financial TV. Never bet the farm on anybody's recommendation, especially the stronger they are recommending something. Look the other way, get the heck out of there. I've taken several financial newsletters, and these guys are good to start with. They're really good. And then you find out nobody's perfect. And It's unrealistic to think anybody could be perfect. You cannot call the future on interest rates, I know, and I think the same thing with the stock market. I started trading stocks. I joined one of these trading groups. The guy was on the radio every day, and I won't say his name. It was his gang. You may know who I'm talking about. I think he's still around. He was very good. He was an old school stockbroker. But I did that during 2006 and 2007. Well, that's when the market was going down. I lost money, but I didn't lose as much as I did if I was fully invested. I'll say that much. But here's the kicker. He said in March of 2009, if you remember that was the bottom. He said, this is only a market for trading. It's not a market to invest in. Well, he was a trader. He was doing what traders do. Traders trade. And of course, that was the bottom, and it went up. If you'd have gone all in there, the long-term investment, you would have been much better. So I didn't lose as much money going down, but going up, I missed out. I got the bottom, but I got out, and I waiting for a good entry point, didn't get back in for a while. I'm going to say trading is hard, risky, and time-consuming. It's emotionally draining. I was almost day trading. We never like to call it day trading, but it had the coffee talk in the morning before the market opened. You'd wait to 10:20 to place your first trade. It was fun. It was exciting, but it just dominated all my time. And I was retired. My wife said, let's go to lunch. I said, okay, I can do that. And I get in the car, and then oh gosh, 5 minutes down the road, I'm pulling up the stock quotes again, to see what the stock market's doing. I mean, that's crazy. That's crazy. I don't want to live like that. So number 5 is index funds work and simplify your life. That's where I'm at right now. You may have heard of Bogleheads, BOGLEHEADS.org. It's their website. It's free to go there. They have a great forum. They talk about buying low-cost index funds, market index funds, and buy and hold, basically. It's lower risk than individual stocks. It's lower risk than trading stocks. And I feel the most comfortable there. So index funds work. I do value line total stock market investment, VTI. A lot of people do SPY, SPY, BND for bonds, or I do tax exempt bonds, VTEB, which is Vanguard Intermediate Tax-Free Bonds. I do a lot of individual bonds. I have learned to buy bonds individually myself. I don't trade them. I can take a tax loss on that if I need to. So anyway, that's my takeaway there is index funds work, simplify my life. I feel peace of mind. I'm not trading stocks all day. I like it. Number 6, set your allocation first, not your investments. Well, you probably already know that. I mean, I was a real estate person, so I was not a stock person. So I just jumped in there and started buying stuff I liked. And like I told you, I traded stocks. These days, I've got an allocation. It's between 30 and 30% equities. I'm 77 years old, and the rest is fixed income. I got some tax-free bonds, and I'm satisfied with that. I really didn't take advantage of this. This is the same point. Make sure your investments get in the right account, tax-wise. This is very important. And I was not really doing that to start with. You got your regular account, you got your IRA account, you got your Roth account, and each one of those accounts have different or suitable to different investments. And it makes a huge difference. Generally you want your stocks, in my case, ETF stock market index, in your regular account. And in your tax deferred account, you would like mostly bonds. I would have thought it would have been just the opposite, but your bonds. The reason you don't want your bonds in your regular account is because they pay interest, and interest is ordinary income. Probably already said more than I need to say. I'm not trying to give any advice at all, and certainly not about taxes, but on the Bogleheads.org site, it's got a great analysis of what accounts should have what assets in there. So I highly, highly recommend that. They have a forum on that account also. It's free of charge. Number 7, tax loss harvesting can really pay off. I really like to do this. Tax loss harvesting is a wonderful thing to do right now in this market in April 2025. We've had a couple of downturns here in the stock market. You have to understand what you're doing. That is right. But you can sell an ETF that you've had 30 days, at least 30 days. You can sell that ETF, immediately buy another ETF that's very, very similar. Don't take my word for any of this. Look it up, research it. I've been very surprised at stock people who know anything about this. If you don't know what that is, look it up. Once again, Bogleheads.org has a wonderful write-up about that. So anyway, these are only my lessons, but I want to share those with you. Let me know if you have learned any of these lessons, or if you disagree with any lessons. It's not really disagreeing. I mean, everybody is different. Your situation is completely different than mine. And so it's not you're disagreeing that it's right or wrong from me, but it just may not be right for you. Let me know what financial lessons you've learned in your investing. And do you use a financial planner or do you do it yourself? Thanks for watching. I'll talk to you later.